I'm gonna start recording on this and try to catch it before it makes that move up over $8. But as you get experience under your belt and screen time, you guys hear me all the time talk about you got to get that experience in, that time under your belt. See how these stocks like to move up and down, day in and day out over time. And then eventually you are going to start noticing patterns and stocks playing out every day, that a lot of the same thing happens a lot. And it's just all up to you to put the pieces together and then develop your own little twist and strategy that revolves around the type of person that you are. So real quickly, before this SWVL runs up and breaks up over that $8, everything correlates and makes sense. Stock right here. This morning, we perked up and we had a nice run on it here from just above $6 all the way up to a high of $8. It ran up $2 a share. Now this year we've noticed there's a theme. You always want to pick up on what's been the theme in the stock market. You've heard people say the stock market is very trendy. There's always something trending and going on. You'll notice a lot of times throughout your career there's going to be hot themes that pop up and take off. Well, this year, it's been new name IPOs. This year, it's 2022. It's May currently right now as I'm making this video. And all this year, we've been seeing a handful of newer name IPOs that been running and getting hot. So SWVL, we pull it up. We see it's a new name IPO. And how you can quickly identify if it's a new name IPO just by simply looking at the daily chart and scrolling out. You could see that there's not much history for this stock, and this stock opened here back in April 1st, 2022. And we've even created a new IPO watch list. All of these stocks here have popped off and ran. NUTX, FRGE, is a recent new IPO that's ran. GNS recently popped up day one and ran. Since then, it's been on watch. LLAP has popped up and ran. All these newer name IPOs, we've picked up on the theme. Now we got SWVL, a new name IPO popping up. Now that we've identified the theme, and this stock has perked up today, let's put together a lot of the basics. See, here we go now. We're running up to that $8. You can identify a good setup, you guys. It's possible. We've ran up this morning from $6 all the way up to a high of $8. And just basic education when learning about this stuff. There's 3 trends for a stock. The stock is either in an uptrend, it's going in a sideways consolidation, or it's in a downtrend. There's only 3 phases a stock could be in. 3. And you just have to identify the one. We've had a good run up this morning, so we're in an uptrend this morning. Usually, you're going to want to see a stock when it pulls back, hold at least 50% of its gains for a continuation move up higher. So if you break out your handy Fibonacci retracement and measure today's move from the low up to the high, this morning's $2 run up, when we started to pull back right here, we pulled back just a basic 50% retracement down to that $7. We bottomed out here, volume retraced on it. We're putting and correlating everything together. Off of that $7, we ripped back up here just below that $8, and now we're pulling back down near that $7.25, near that area. And this is the importance of basing your technical analysis skills off of these psychological levels. Don't get caught up in exact prices. Exact prices like $7.30. Ooh, look at that bottom wick. It bottomed there at $7.40. Don't micromanage it like that. You're going to stress yourself out and you're just going to you're going to blow it. Focus on psychological price levels as I preach to you guys. Train your eyes to look at how these stocks are moving at these whole dollar levels, quarter dollar levels, half dollar levels, and then once again, $8. We held at 7. We popped up here to 775. We've pulled back down here just below 750. So ideally, by developing a strategy and a plan here, you'd be looking to get in at around this 725 level, and you're putting your risk just below that $7. So you're risking 25 cents, and your reward would be either to sell up here at high of day at $8, maybe sell half or a third of your position when it runs up and hits $8, and then wait for that $8 break. You're risking 25 cents to make upwards of 75 cents, $1 or more per share. That's a phenomenal risk versus reward ratio there. And just by putting it all together like that and putting together a plan on the fly, this is how you can easily do it. You don't have to overcomplicate it with all of these indicators and what all these people are using nowadays. Just keep it bare bones simple. I tell you guys all the time, listen to the stock and the chart. It will tell you what's going on. And when you really think about it, all that's really going on, it's just a battle between a bull and a bear. And it's up to you to go with all of these candlesticks that give you so much information in the bottom wicks, the upper wicks, the body of the candle, and how they act at these price levels. Who's really in control, right? Volume, price action, knowledge of candlesticks. You don't have to overcomplicate it. You don't. Everything that I've put together for this with practice every day. Yeah, you're going to be slow at it. You're going to suck at it at first, but repetition over time, showing up every day, seeing these setups day in and day out, identifying them, putting together piece by piece what's going on, putting together a plan in your head, watching it play out before your eyes. That's how you get better. And then over time, you'll start to pick up on this, and then you'll start to realize and see how these stocks like to move up and down in phases. And we broke all of this down on a 1 minute time frame. We didn't even put it all together on a 10 minute and a 3 minute, and they all correlate differently but in the same, if you get what I'm saying. Here on a 10 minute, let's put it together on this now. You see that the stock was recently in play up here. It consolidated here, had a huge up move right here. All that volume showed up from 625, 650 right here. It ran all the way up to a high of $11.25, all the way up there. So now, once again, you can get out your Fibonacci tool, measure from the low or the area the stock broke out from. I like to measure from both. Like, you got to look at technical analysis and charts. It's an art, and you're all going to look at things differently and plot from different areas. We measure from the low here all the way to the high. We pull back 38.2%, almost 50% too, with it pulling back here. Remember when we were talking about anytime you measure a move, you at least want to see when the stock pulls back for it to hold at least 50% of its run up. You want to see it hold up at least most of its gains for that continuation move to the upside. We pulled back here, bounced off that 50%, back up to its highs, pulls back again, and then with your eyes, you could put together a wedge and a triangle. Stock fell down through that, down to the Fibonacci golden ratio 61.8, lingered around there, came right back up, found resistance right at the wedge or triangle where it fell from, and down she went even lower. You can even connect trend lines. Technical analysis, it all correlates. Now look at SWVL is testing high of day and breaking up over that $8 with an entry near 725. Right now, look at how it's running up. you'd be up over $1 per share. And it's just all about recognizing good setups and having the discipline to wait for these types of setups. I like to try and pride myself on, I know I have great stock selection. I know what stocks to focus on every day. And the only way you're going to get better at that is by showing up every day and seeing how these duds play out, how these runners play out. You want to see how strength plays out throughout the trading day, how weakness plays out throughout the trading day. And I like the saying, if you focus on garbage, you're going to get garbage. If you focus on quality, you're going to get quality setups. Now, real quickly, back here to the 10-minute time frame. We were just putting it all together of it correlating triangle and how it found resistance where it fell through that triangle. And you can even connect a trend line on this, connecting all of the lower highs all right here. And you see the stock surged up, got up over that trend line, up above it, and when it pulled back, it held at that trend line as support. By visually seeing this, and when you're new, recognizing patterns like this, that's strength. And on all different time frames, you're going to see all this stuff play out. So you'd be wanting to tell yourself, now that we got above that trend line, if we can hold that trend line as support and build up off of that, then look left on the chart. You got this level to get through. You got this level to get through here, which is at 850. You got this level to get up through, which is near $9, all the way up to 10. Take it one level at a time. So there was just below $8. Right here is at 850. Right here is at, looks like $9. Right where it fell from that wedge is that big psychological $10. So these are all of your levels for the stock to get up through and work its way through. And notice how I'm focusing on key psychological price levels. Every $0.25, $0.50, $0.75 $1, I'm focusing on. I'm not getting caught up in the micro of price, $8.35. If you're a guru doing price action like that and technical analysis, pinning it down to the exact penny, he's going about it all wrong. Don't overcomplicate it. Don't. Trading is already hard enough. There's no need to overcomplicate it. Focus on the simplicity of things. Keeping it simple. You hear people all the time say, keep it simple. Don't overcomplicate it. Listen to the chart, and the chart will tell you what's unfolding at hand. Rewatch this video over a few times. May have missed a few things that I've thrown at you in this. I know I threw a lot of information at you in this, but in the stock market, there is just so much to talk about and learn about. Even to this day, every day I show up, I'm still learning and growing. 7 years into this. It's a never-ending journey and a process, you guys. As we like to say here, those who stay will be champions. Statistics have shown 90% of people fail and lose money doing this. You want to be the 10% that thinks differently and outside of the box. And most importantly, it's all about consistency. Not consistently pulling in profits, but consistently showing up day in and day out, outworking everybody, showing up every day, even on slow days, even when the market is not hot. You're showing up every day and you are learning and growing every day. I'm Mr. Wolf. If you're new here to the channel, hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. I have over 800 videos in my library here on YouTube. Check out my content. Also, there should be a link down in the video description. I have a Discord server. Feel free to join the server where we're all out here every day on that grind. As I always say, guys, have that patience, have that discipline, study, study, study. Later. And something to note, and I want to add in to this video lesson. I know when you're brand new in the stock market and you're learning about all of this, and there's even gurus out there that teach you guys, be careful who you learn from. Because remember, when you're new, once you pick up on an experience, it's hard to break that habit. Naturally, when you're new to the market, you're not considering your emotions, your size when trading. You're not really considering a lot of things. And a lot of newer people get sucked into a buying at the high of day. Every time I look at charts, there's people always with entries at the very top. They're chasing after that high of day break. And over time, when you start to look at these stock charts, you'll start to notice that, man, stocks just run up and they'll test that high of day multiple times and fall right back down. Look at how many times this one stock came up and tested that $8 in high of day multiple times and did not break. 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 times it came up and tested that $8 and did not push up through. Everything that I've talked about in this entire video lesson, you want to try and see it before it happens. And by showing up every day, seeing how these stocks like to set up, play out, and you're putting in that work, you're breaking down these charts, you're putting everything together like I just did step by step in this video lesson, and preparing yourself for when you identify potential setups like this again in the future. Seeing it before it happens. That's where you're going to make your money. Then you're selling to the dumb money, chasing after that high of day breakout. You're selling to the dumb money that wants to chase after alerts. Everybody wants to just be told when to buy, when to sell. They don't actually want to learn how to break down a simple technical analysis stock chart and figure it out. They don't want to do that. Put in that work, do with time. And I love this saying, you're working for free right now, but think of it like this. All of that work you're putting in right now, it's going to pay off in dividends down the road.